Okay, so you were asking me a question. Let me see if I can find your question quickly. Yeah, you were right here. You were telling me how to identify buying signal, how many minutes need to apply, 1 minute, 5 minutes, 30 minutes, right? So you're trying to identify buying signal. First of all, my question is what pair are you talking about? So I'm just gonna show you an example on GBP USD because you didn't specify what pair exactly. But in general, if you want to identify a buy setup, you have variations of ways that you can apply this logic. I don't, like I said, I do not know your experience. I've been exposed to the market for over decades. So in my logic, the best way to do it is to always use the higher time frame by default, such as at least the 1 hour time frame, to understand the key levels. Because when the market is trending, the market is so if it's a bullish trend, the market is going to create a low, it's going to create a high, then a higher low, then a higher high, and vice versa. Now, as you can see, this higher low is connected to this green line right here, and that green line right here is connected to the bullish break of structure, which is part of the Enigma logic that is inside the indicator, right? So let's open the screen. Okay, let's go on the 1 hour time frame. So that is one way, because I do not know how long you want to stay in a trade, right? So if you are, you have to, before you take a trade, you have to decide, are you a scalper? Are you an intraday trader? Are you a swing trader? So you have to define what suits you best. Okay, so for example, I like short-term trades, right? 30 minutes, 45 minutes, 1 hour max. So by default, I can do my analysis maybe on the 30-minute time frame, the 15-minute time frame, and then I will probably use the that same time frame to position myself because the indicator works on every time frame. Okay, so for instance, if I was on the 30-minute time frame and I wanted to identify a buying opportunity on GBP USD, then we can see this morning, this morning literally, we had a buy signal right here. Now, how would we apply this buy signal? So let's do a market replay right here. This is how the market was looking this morning. Then I'm only focusing in the present. I'm not focusing on the past. I'm only focusing on the signals that will come in the present, right? So if we play candle after candle, we can see as soon as this candle closes, we have this line right here. So this is in the present. This is today. This is the Asian session kill zone. So I want to trade during the London session kill zone. So now when the market is going to retest this area, I'm going to wait by default for the market to return to this level, and then I will go on the lower time frame and observe the patterns that are being constructed on the 5 minute or the 1 minute time frame to see if I can observe that there is a build-up of a pattern that is going to contribute in pushing the price higher, because I already know that this green line is telling me that there is a bullish bias. Okay, that's my bullish bias. So my direction is clear. I need to look for buy trades at this level or lower. Now, when the market returns to this level, all I have to do now, like I said, you see the market is below the level. I only have to go on the lower time frame, such as maybe the 5 minute time frame, right? Now I'm on the 5 minute time frame. The line is still here, right? Because that's a line from the 5 minute time frame. Is not the same line as the 30-minute time frame. So if I want to use the same guidance of the line of the 30-minute time frame, what I will do is that I will take a line, extra line, and I will place it here so that I have a visual that I can identify on the lower time frame, such as the 5 minute time frame when I switch my time frame. So here I'm going to switch a time frame, and I know that this line, this green line, this horizontal ray represents the same bias line that tells me I should be looking for a buy at this price. Now the market is below this price. When the market is below this price, now I can use the history, meaning on the left, we can see that we have key levels here where the market is bullish with the line telling us that we should be looking for buy opportunities in this area. Now the market is here. So now at that point, I am confident in opening a buy trade because I am below the discount level. The market has already went above, it came back and retest, and now I only have to take my buy trade here and allow the market to evolve in the direction of the market and then close my trade when I'm done. And this is how I would identify a buying signal. This is one variation. Now, I don't know if you noticed on the 5-minute time frame, we had a stochastic signal right here. So let me put a circle here so you can observe. So right here, inside this circle, you see we have a stochastic signal. So you see, I'm using multi-time frame to help me gain confidence in the fact that I'm going to use that bias that I identified on the 30-minute time frame, because it's a greater time frame than the lower time frame, so that I know now I'm going to have an edge by entering below the key level that we identified on the 30 minutes, and then use the 5-minute time frame plus other signal that will contribute, such as the stochastic, the sniper levels that we have here, plus the break of structure levels that we have here, plus the EMA that tells us that the market is most likely to be bullish, to contribute so that I can enter before the market breaks above. And then when the market breaks above, then we have this key opportunity, right? So this is how I would apply how to find a buying opportunity in the market. What I explained to you here on GBP USD, you can apply it on any pair, any asset, and the process should always be the same. That means if you're looking for a bullish setup, at least you want to start on the 1 hour time frame and then the 30-minute time frame, so you can have a perspective of the current trend. If you're looking for a buy trade, you need to make sure that you identify a swing low, a higher high, followed by a higher low. And then from there, observe to see if the indicator is confirming that it's identifying key levels where you only have to wait for pullback. Now look, if I miss this opportunity here to buy, then on that same time frame, on that same 5-minute time frame, we can see right here, when the market goes above, it creates this line right here. So let's play a playback right here. As you can see, sorry, bro. As you can see, the line is not showing up here. So watch. As soon as this bullish candle close, it shows you the line. So if you miss the opportunity here, you can wait for the market to retest this area, because it's going to retest, as we saw, and then you take your buy trade. Market returns in 3 candles, boom, it closes, you enter your buy trade right here, and then you have a nice opportunity. You put your take profit maybe 2 to 1, and then you wait for the market to provide, the opportunity for you. Okay, so variations of weight, this is how I would apply it based on my experience. Like I said, I've been doing this for over a decade now, so it's up to you. Okay, and that same logic, you can reverse the psychology of that for sell opportunities as well. Like I said, because you did not specify what market, I use the GBP USD, but that logic, you can apply it on every asset and you should get similar result. Again, there is no guarantee in the market. It's all about probability. We are trying to trade within a specific time frame, which is London kill zone or the US kill zone, because that is where we're going to get the best opportunities. This was during the London kill zone. Okay, we did have a sell opportunity here on the London session, which is connected to this bearish break of structure. That means when this opportunity came right before the London open, we can see right here, we already have the line here. That line, you can just extend it right here manually by placing a line here, changing the color if you want to, right? You can just extend it. And then when you get the stochastic confirming, like, oh, you're going to get a sell signal, bearish candle, that's a pattern. That pattern is called a railroad track, or you can call it a tweezer pattern. And here you have a quick sell opportunity, stop loss above. Why? Because it's a probability that the market is going to go down. We have the stochastic, plus we have a key level on the left, and then you can go for a quick 2 to 1 or 1 to 1, and then wait for the market to provide that setup. Okay, thanks, bro, for watching. If you have any other question, don't hesitate. Yeah, I hope this explanation is helpful for you.